All right, guys, welcome back to the channel. We're looking at the market slowing down today. Bitcoin heading further down over the last 24 hours, now down $17,000, 18 days from the previous top, which is also the all-time high. Cryptocurrencies slowing down, MicroStrategy slowing down, one of the biggest buyers for Bitcoin, and the stock markets, although putting in all-time highs over the last couple of days, they're also going through a grinding phase, this slowing down process. On the flip side, if I've already said that, we're also seeing new all-time highs for metals, gold, all-time high, silver, fresh highs, 14-year highs. So what I'm gathering is that we're seeing a bit of a slowdown before this final move into the top. So that's the analysis I want to cover with you guys today. Hit the like button, subscribe to the channel if you're new here. It's your home of macro cycle analysis. And this was specifically looking at the suckers rally that we've just gone through for Bitcoin, running up into the $112,000 with the pullback we just saw in the last 24 hours. Not a bad looking pullback either. So first things first, let's have a look at the daily chart for Bitcoin before we head down the list of markets to uncover here. 112,000 is the key level that we're watching or have been watching now for many, many days. It was the previous swing low for Bitcoin in early August, so a month ago, before it ran up into that new all-time high. So that's the relevance of that $112,000 level. If Bitcoin can pass that, the next key target that we're watching, around $113,700, that would give us a red flipping from red into green. It's this 3-bar pattern here. And generally when we see that, the market slow down even further. We saw it on the 3 days back in December. The market ran down 30%. We saw it in March 2024. That's on the daily chart. Remember, I've got it on a weekly chart here just so you can see what's going on. And from March ran down to August. That was a 5-month decline after there was 3 days down from a significant top. Now, our daily videos cover many detailed charts, data, indicators, and our forte, the cycle analysis, to help guide us through the investment cycle. So if you're a brand new subscriber to the channel, then I highly encourage you to get our weekly reports on Bitcoin, altcoins, and the economy, including the real estate cycle. They're easy to read in under 5 minutes each, making them extremely digestible for all investor levels. There are 3 reports coming your way starting your week from Tuesday. It'll get you up to speed on how we forecast the markets and how we've been able to profit during uncertain times leading into and out of the cycle peak. It's completely free, so subscribe today using the link in the top of the video description and you'll receive your first report shortly. There was also the 3 red week signals. So these red weeks here, 1, 2, 3, typically we will see a bounce, so some sort of suckers rally. I think we've got a short-term one here. It may go on for another few more days, and then a test of that low there around 107. To the downside, 105 is the next key support, and then the major one around $99,000, which was the previous swing lows right here, and then also the 50% level. So the Liberation Day low in April to the top, the all-time high. When you slice that through the middle, the 50% level is $99,000. And another target that I know a lot of people are watching are around your 50-week price targets. This is climbing at a rate of about $1,000 to $1,100 every week, currently at around $5,000. So over the next couple of weeks, it'll possibly get to about $98,000. And that lines up pretty closely with the 50% level. So if we saw a spike there over the coming weeks of September, or a wick down, and then a close back above the 50%, that would be one of the best low signals I think we could get at the time. Doesn't mean it's going to happen, but if we saw that, I suspect we'd see quite a bit of fear coming back into the market, possibly even dropping into extreme fear, and that could all line up pretty well for another rally higher. I'm going to talk about some price targets to the upside as well from particular levels in just a moment. So that's the short term. The medium term in terms of the weekly chart hasn't necessarily changed at all. We're really watching for any sort of bounces here and closes above 116, 117, because that's the 50% on the short term downside, and the 7-year resistance line. That's pretty much what I want to see for any sort of strength there for the bulls, but it wouldn't surprise me if we did get some sort of rejection, test of the lows, and then we start to climb higher with how everything else is slowing down out there, waiting for some of these announcements from the Fed to come out. Something that is very much underperforming and has been one of our end of cycle signals is MicroStrategy, absolutely getting crushed time and time again here. And it has not put in a new all-time high. The all-time high was back in November 2024, so coming up to a year ago. And the slowdown for MicroStrategy has been monumental, absolutely getting crushed here. If I throw in a couple of lines so you can see where we're at, it continues to fall underneath the 50%. And the importance, I think, for MicroStrategy and the Bitcoin bull market is if we're seeing higher and higher prices here for MicroStrategy, then you're probably earlier in the cycle. Now that we're seeing lower highs, lower lows for MicroStrategy, on the daily at this point, under the 50%, underneath some key swing levels here, like 340 at the moment, then is, to me, for my analysis, is suggesting there really isn't that much more time to go. So it's not to say that the game is over. I think there's still further upside, but I think it's a lot shorter than what we will likely hear as we approach the next top. So if Bitcoin does get going again, starts to break the high at 124, maybe it makes it into the 130s or 140s, and MicroStrategy maybe goes on another run to the upside that puts in a lower swing top, so a lower high, we'll probably hear that this time is different. Bitcoin has changed because institutions are buying, because the government's buying, the US government, because they've got their strategic reserve, because of any particular reason out there. The 4-year cycle's dead. You'll hear everything to tell us that things are different, but the investors are telling us something here as well. They're saying that they're looking to get out of Bitcoin because there is lower highs forming. That's what we have to watch out for while the market is going crazy. And speaking of going crazy, let's take a look at the Fear and Greed Index. Today sits at 48, so we're still at neutral. Not a bad thing. We're seeing consolidation, seeing resetting of the market sentiment. So that's where it is here at 48. The FOMO finder needs to update for today, but essentially I would say it's still going to be around 0. That's another really good market sentiment indicator, especially when we see them line up together, when we see extreme fear and we get into the panic phase, which is the purple area down here for the FOMO finder. When those two come together, you've got a nice strong base forming. You saw it happen again here. We got fear and then panic, and it's very rare that you'll see the FOMO finder jump into greed or extreme greed. You can see it happen a few times at the tops, and it also lined up with extreme greed for the Fear and Greed Index. So a really nice indicator there when we can combine the two. We haven't seen that at this stage, and both of them are basically sitting in neutral. So market resetting, things are slowing down, interest is fading. We've seen that across the board as well. Liquidations are down, less people trading at the moment, but the price is still holding up relatively well, and we haven't broken key support levels. The 99K is some area that we're looking at as well. This is the liquidations. So as you can see, they're starting to drop off. There are spikes, longs getting liquidated, a little bit on the short side as well, but you can see that it's a lot less overall compared to where we were at some of the highs, and also as we were trading through previous old all-time highs. The exchange volume is also dropping off, the 7-day moving average here at 53, and provided it doesn't break through the lows and stay under there, then this is just part of the market resetting, at least from what I can tell. Market resetting, market sentiment resetting. The people who came in at the tops have basically jumped out again. Maybe they got wrecked buying the highs and buying Ethereum tops, whatever it was, and they're just hoping that the market goes up. You see that a lot with a lot of people that will be buying around the highs. There's a lot of excitement. They're expecting it to go up because it went up the weeks before, and it's not going up anymore. So they start to lose interest. And that's what I think is going on at this point in the market. So short-term Bitcoin, medium-term Bitcoin, things are still looking on track. MicroStrategy, another good one to keep watching. Should we see this thing run up again? There is a lot of overhead resistance starting to form here for MicroStrategy. And to me, seems like we're going on a bit of a repeat of 2021. I was told that this is wrong and that it was looking more like a 2024, and all the MicroStrategy hopefuls were waiting for this big boom to the upside. Anything's possible in the market, but you've got to pick a side, and my side that I'm picking is that we're probably closer to this. So be it. Maybe and hopefully I'm wrong and it all just runs straight up, in which case my Bitcoin positions are going to be doing very, very well, but I'm not going to be in MicroStrategy. But at this stage, when you chuck on Bitcoin versus MicroStrategy, it is really underperforming, really, really underperforming. So you can see where the all-time high was for MicroStrategy. It's down about 40%. And from that all-time high price, say for Bitcoin around that same level to where we currently are, Bitcoin's up about 23%. So there's a differential there of about 60% difference. That is not a great thing for any of those investors that have been holding on to MicroStrategy now for, if they got in on this big boom to the upside, coming up to 12 months, so around about that 10-month mark. The slowdown continues with the cycles, looking at our composite of the 5 and the 10-year cycle. So important cycles to watch for any of your chosen markets. In this case, we're looking at Bitcoin. We've got this little rally up, looks like the red line, and then the red line, which is, as I said, 5 and 10-year roadmap here, suggests a bit more of a grind through September and a possible drop, which also lines up with what I've been discussing here with the 3 bars down, 3 red weeks, more importantly, the 3 red weeks, maybe a sucker's rally, and then a bit of a drop. If that drop happens, I don't expect it to be as severe as this, only because you can see the blue line, which is what's actually happening. I'd expect it to come back to somewhere around those levels. So because I've only got a red line here on the chart, you'd look at it something like this perhaps. You can see it come down into this zone and then start to find itself a base and work its way higher for October. And we'll decide what happens after that point, November, December. A little bit far out at this point because some of the cycle timings are suggesting tops in October. But let's keep watching out because the 5 and the 10-year are looking relatively good here for November as well. So just extending it a touch. Fear and greed, as we've covered, neutral, nice resetting, liquidations, and the exchange volume, nothing too severe there. The crypto search terms, crypto and Bitcoin, on the last couple of days have been ticking up, put in a semi-base here, a reasonable base, which is also higher than it was 90 days ago. And if we take a look at 12 months ago, also looking okay here, just flatlining like it did before, and it's flatlining higher than it was 12 months ago. So although interest overall is down, when we compare it to the last couple of weeks, you can see the spikes here in August, it's still higher than it was 12 months ago. So lots of people coming in, less leaving. More people coming in, less people leaving. So like 2 steps forward, 1 step back sort of situation. Now, the 18-year cycle, how's Bitcoin going to fit into all of this? I think we still have further to go in the upside here. However, as usual, things are slowing down here as well, coming into this peak. These are the 3 things that I'm looking at, looking into these new all-time highs for the stock markets. But slowing down into this into the peaks is mostly looking at the land cycle. So we have some of the land data here. The Home Builders ETF running into a fresh high for the last 9 months, 10 months. Previous time it was getting into this higher price was about December 2024. And should we put in a lower high here, that's where things also will slow down for the real estate cycle, which of course is the leader when it comes to the markets and the market cycles. Generally, when we get to the end of the cycle, the peak of this cycle here, the recession that occurs after that, the crash that comes from that, will be land-led. Now, we're also seeing a slowdown in the housing market data, but this is looking seasonal. You can see all the spikes here over the last 12, 13 years, going back to 2012. You see a spike, that's June. You see a spike, it's June. You see a spike, it's June. June, July, June, July, June. You get the idea. That June-July period for the US tends to have a spike and then it slows down. So although this looks seasonal and we're getting a bit of a drop off here, there's the national price. We put in a new all-time high here on the national price, 446,000. Prior to that was 442. So the real estate, the land prices were still going up. If we get to the next time this starts to turn around and head higher, like it does pretty much every other year, you get the June high and then it starts to run higher. If that happens to be a lower high, then I think that's something to be watching out for with the stock markets and then of course Bitcoin and so on. Cryptos probably would have had their boom and bust by that stage because this is going to take 12 months of data to get to that next high in June. You know, we'll get August data soon. So yeah, June's going to be like 10 months away. And so by the time we get to that, that's a lower high. That would be another red flag to me that the macro cycle, where is it here, is starting to slow down as well. And in that time, we're seeing gold prices rise. But the good news here, and Michael's done a fantastic video on this, which you can watch at the end of this video. I'll leave a link to it so you can check that out, is looking at gold and the stock markets heading higher together, which suggests there is still further to go in the cycle. And people are getting, well, Goldman Sachs, JP Morgan, all these guys again are starting to up their targets. The last time we saw them talk about $5,000 gold prices was at the $3,500 top. You can search those news articles. It came out on the 21st and the 22nd of April, all talking about $5,000 gold tops. Then it went through a consolidation of a few months and started to break out again. So this time, however, we might keep going with these articles coming out for new fresh high prices, which I think is just going to keep spurring the market on further and further into these tops. The interest rates are still, well, now they're getting absolutely destroyed here. There is almost no one that thinks the interest rate is going to remain on hold at 4.5%. And almost the entire market is thinking that there is going to be a cut coming up. And with that cut, that's possibly why we're seeing the home builders go up, because there could be some more profits in land, in building homes now for the next foreseeable future, which is why the market is starting to buy up these home builders. Now, if this is a buy the rumor, sell the news type of event for the home builders, we'd possibly see it run up into our next resistance levels. And then as that interest rate cut comes, we don't know if it is, of course, only Jerome Powell knows that. If that does happen to cut and you see this start to sell off, and in particular over the coming weeks or months, break the 105, that could be a signal that you've got a lower high forming on the home builders. Next year, potentially we'll see lower highs for the real estate prices as well. And the interest rates, they'll probably stay where they are at this point, maybe another cut or two as the market's anticipating that. But I think longer term, we're going to see interest rates eventually have to rise again, as I pointed out here. So I don't think we're going to get the rise in the second half. I think we'll get the rise sometime in 2026, possibly even further out now, the second half. Historically, it's seen that unemployment rising, they'll have to start cutting interest rates because there's more people out of work and the economy is slowing. Now, the economy may in fact be slowing, but the unemployment is still around historically low levels. And I've got this 3-year bar here, so 36 months, and I've got it from a measured area from where the market, or where the unemployment started to find a low. This is where it currently is, so it's at about 3 years, and it's been grinding higher for 3 years. This is the second longest grind in history. Often, when it finally reaches a low point, like there in 2019, within the 3-year period, you've seen the low, you've seen the high, and it started to come back down. Or at the very longest period, you've seen a low and the high in that 3-year period. I'll show you what I mean here just by dragging this over the top. There is the high of the unemployment, there is the low of the unemployment, and that's 3 years. Within 3 years, you saw the low and the high. Then we saw the low almost to the high within that 3-year period. You got the low to the almost the high again, so three and a couple of months there, and then it started to roll over, and so on and so forth. We can go back. The only time it was different was, well, similar to now, was back in the late 60s. So you saw a bit of a low, and then it continued to grind lower, low, grind lower, low to the high there in the early 70s, and then it dropped off again. So this has been an extremely long time of historically low unemployment. Eventually, it looks like things will rise, and we started to see some of that data come through here, which is why many believe that Powell will have to cut the interest rates at the next meeting in less than 2 weeks. We saw the non-farm employment, the unemployment claims, yada, yada. They were forecast to be 73. They were actually 54, so a lot less. And then in the next 24 hours, we've got a few of these ones coming up, the non-farm employment change, and the unemployment rate. They're expecting it to increase as well, so from 4.2% to 4.3%. But it doesn't look like it's slowing down the market at all yet because of, I think, it's still at historically low levels. Might be some short-term shocks, but long-term doesn't seem like it wants to slow down just yet. Now, to cryptocurrencies, I think that's good news there because, well, I think there's still further to go in the cycle, and we're probably still going to see some more risk on appetite from the market. USDT dominance still underneath the 4.6, so in a good position here, provided it stays under 4.9, still in a good position for risk on with the bull market. You can see the double top here happened last time, started to slow down here and fall. Ideally, if we do see any spikes above this level, it comes back under the tops here, roughly around that 4.6 level relatively quickly. So even if we do see that, we saw Bitcoin and alts drop over the next couple of weeks, and we saw a spike here in USDT dominance, I think it has to happen relatively quickly over this period of, say, September into that first part of October, and then you'd start to see the trend continue on. The area remains 3.7 to 4.1% potential top there. If you saw the USDT dominance again base out like it did previously, like we covered back here, and we're looking at it back in May, then that could be a good sign that the cycle is nearly over at that point. Ideally, for a mega bull market, mega altcoin season, you see a breakdown of 3.7%. That's the key level there for that all-in altcoin season. Now, for an all-in altcoin season, we might in fact see some of these other larger cryptos move, but some of them are really starting to die off here. And this just measures back to around the cycle low. That's the level there. That's the Bitcoin cycle low back at the 21st of November. Solana has been tracking pretty well, but slowed down over the recent period. It's actually underperforming for the last 12 or so months. Even further back, if you took it to March, it pretty much hasn't gone anywhere since March 24, so a year and a half. Whereas Bitcoin's continue to be on the rise here in the orange, XRP in the white, big boom, and then nothing. So it's basically in line here with Bitcoin. Ethereum underperforming over the entire cycle, but of course has performed very well in the last few months from April to now. Yellow, Binance and Doge being in the green. So they're still some of the lowest there, but some of the big market caps. So in a stronger position, Ethereum seems to be coming through. Solana wants to keep holding that ground. And for now, XRP is just above BTC. Ethereum, should it slow down here, the levels we're watching, 3,600 down to 3,200. Reason for that is that we've seen already 137 days to the upside. Previously, 133. Prior to that, 150. Prior to that, another 150. So it seems like now is a bit of a rotation and consolidation of the price before we get to this final pump to the upside. Plenty of macro support on the underside here for Ethereum, even though the last couple of days have been relatively weak here for ETH. Now, if you take a look at this chart without the bars on it, when we get to these time targets to the upside, so time pressure, right? So 130 days, it does it pretty regularly through this cycle. The interest wears out. We've seen that happen. We talked about it around those peaks. Now we're starting to see the 1 week swing. So that's what this is here, the yellow one. This one is in an uptrend at the moment, but you can see around the tops, it starts to slow in terms of the price gains. So the gains from the highs to the highs, and then again to the next high, it's starting to slow down here. Doesn't mean it's over yet because we haven't seen a breakdown of the swing low that would turn the trend uncertain. And then if you got a lower high and a break, that's when it would turn it red, meaning the trend would turn down, like right here as the trend broke down. But earlier signs seem like it is definitely going through its consolidation. Ideally, if you're holding ETH and you don't want to see it fall any further, of course, this is the price point. But previous times, ETH has done roughly 20 to 30% corrections. And from the high down to 20% takes you down to about $3,900 per ETH. 30% takes you out to about $3,400 per ETH. Still, both targets above the 50% level and just on the previous tops here, if we're just looking all the way back to the previous cycle as well. So a pretty reasonable level there. Ethereum is in a relatively strong position, even with any sort of significant pullbacks. We're seeing the pullbacks at the moment on ETH versus BTC. It's come up, hit the 4%, pulling back a little bit here, just sitting on the 10-year support line at the moment. And movements to the upside, I still think for this cycle, ETH is unlikely to get above 5.5%. So this number here, 0.055. So that's where I'll be watching out if it gets that far for any sort of major profit taking to occur. And if it was to get above the 6%, then we get an overbalance in time and price. That means it would be doing bigger gains than we saw on the last rally up. That's a positive sign. So at the moment, still under these levels, I think we're running out of time with the cycle. Therefore, if it was going to happen, it's got to get above that, consolidate, and then it can keep going. Solana BTC in a relatively good position here again, even if the market pulls back, holding above the 0.0018. Stronger position there for Solana, so it can start to rally again, head towards some of these previous tops, and that's obviously going to mean that it will be outperforming Bitcoin through this next stage of the move. And Bitcoin versus the metals. So we looked at some of the metals in yesterday's video in more detail, and that prior video I did here, this major bull market happening for silver. Now, if we take a look just quickly at gold, new all-time highs, silver also just sitting at new fresh highs, and in the case of the dollar, short-term up, potentially long-term down. I think that's going to be also taking a bit of the pressure off the assets as well. Bitcoin is underperforming silver, and it's underperforming gold by a fair margin here, going back to March of 2024. So it did pull back, had another rally, pulled back, had another rally. This time it's at a lower high, but it hasn't broken the lows yet. So that's the saving grace here for Bitcoin holders that could still be sticking it to Peter Schiff. In terms of Bitcoin and silver, higher high, higher low. At the moment, some shorter term lower highs, and it's beginning to break. All this means is if this goes up, if this chart's going up, it means Bitcoin is stronger than silver. If it's going down, it means silver is stronger than Bitcoin. Going up means, say, 1 Bitcoin would buy you 3,200 ounces of silver. Now it only buys you 2,600 ounces of silver. And the same deal here for gold. It once was 40 ounces. One BTC was buying you 40 ounces. Now it's only buying you 30 ounces. And the more this goes down, the less gold you can buy with your BTC. So things like, it seems like there's a bit of a rotation happening in the markets. Even though that I don't think the cycle is over yet, you can definitely see some of these rotations going on out there. And the same sort of thing with the S&P 500. Still a lot of strength in the background, even though it's been grinding sideways and slightly up over the last 2 months. Good things, I think, are still to come here. It's just about picking your poison for the remainder of the cycle. Which cycle are you choosing to play with? That's up to you. You know the one that I'm looking at here on the channel. Hit the like, subscribe to the channel if you're new here, and go and check out Michael's video that he just posted a couple of minutes ago. All right, guys, have a fantastic weekend. If you're celebrating Father's Day, have a fantastic Father's Day. Cheers.